Hey, good morning, everybody. Today is Friday, February 19th, 2016. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Much of what we do at Push Button Stock Trading is based, in part or in full, on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. The N in CANSLIM stands for something new, new products, new management, or perhaps new market conditions. The N reminds us that we need something new and exciting to sustain longer-term profit growth. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify the market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 11 came from the precious metal mining industry. It was interesting to note this morning that precious metal mining was the top industry group on a 6-month, a 3-month, and a 1-month basis, in addition to being at the top of our spectrum analyzer. Maybe worth taking a look at precious metals here. Integrated utilities had 8 stocks. Airlines had 8 stocks. Real estate investment trust had 7 stocks in the top 100. And rounding out the top 5, computer hardware and specialty apparel stores with 4 stocks each. We've been seeing a lot of real estate investment trust recently. We've been seeing a lot of airlines, and we've obviously been seeing a lot of precious metal mining recently. These may be good places to begin looking for leadership now that the market has confirmed the uptrend. Let's start today by taking a quick look at the Russell 2000. As we've been noting, I believe that the Russell 2000 is the key to the market going forward. The Russell needs to take out resistance here in the 1040 area. Yesterday we challenged this downtrend and failed. Obviously, before we can challenge and take out the 1040 area, we have to better this trend line. This trend line is the lower channel line of this channel that was established when the Russell 2000 began to break down back at the end of November and early December. Until we take out this level of resistance right here, I'm not going to get real bullish about this market. Let's see what the Nasdaq Composite's up to. But before we do that, the M in the CANSLIM acronym stands for market, and to my way of thinking, this is the most important element. So let's take a brief look at the market. Yesterday, stocks gave up some of the impressive gains that they had made the previous 3 sessions. It was an orderly retreat or consolidation and came on weak volume, just what the bulls would want to see, particularly so close on the heels of the market confirming the current uptrend. Our market timing model is on a margin signal. A margin signal is our most aggressively bullish signal and indicates aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working toward fully invested. A word of caution here. Our market timing model is a mechanical signal. When certain conditions are met, it mechanically changes. In this case, to a margin signal. There are very few stocks in our universal watch list that are setting up in what I would consider proper bases, much less providing buying opportunities, so be careful. At this point this morning, we're having some difficulty with one of our data feeds, so I don't have advanced decline numbers or new highs versus new lows. But large capitalization stocks did outperform small again yesterday and continue to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. This remains a volatile and somewhat unpredictable market, so be careful. Okay, Nasdaq Composite yesterday was down 46.52 points, or 1.03%. We closed at 44.87, and that's significant because once again we've undercut this support resistance line right here in the 45.06 area. This has been a battleground, this 45.06 area. We can't seem to decide whether we want to trade above it or below it. In order for the market to make significant progress, we need to recapture that area, and hopefully we'll recapture it today. Trading volume yesterday was just the way we would want to see it on a sell-off this close on the heels of confirmation of the uptrend. For you followers of William O'Neill, we are in a confirmed uptrend. We've been in a confirmed uptrend since February 18th. Right now the Nasdaq is bracketed by support down here in the 42.92 area. Hopefully we don't get back down there. And is struggling with support resistance up here in the 45.06 area. Were we to break through there, the next significant area of resistance is this trend line, which goes all the way back to the beginning of the bull market back in 2009. Our market timing model right now is on a margin signal. The margin signal is our most aggressively bullish signal and indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working toward fully invested. Let's take a look at what the S&P 500's up to. S&P yesterday was down 8.99 points, or just under 0.5%. We closed at 1917. We challenged this trend line. This is the same trend line that goes back to 2009 that we talked about on the Nasdaq. We challenged and failed there yesterday. Trading volume was below normal and below the prior day. We are on a confirmed uptrend in the S&P 500 and have been since February 18th. Right now we're bracketed by support down here at the 1867 area and resistance at this trend line. Were we to break through that trend line, the next significant area of resistance is up here in the 1893 range. The S&P right now is on a margin signal on our market timing model. Before we go, I want to talk about a stock. I want to talk about Smith & Wesson. Right now, we are in a confirmed uptrend in the market. We're on our most aggressive margin timing signal, and honestly, I can't find anything out there that really looks like I want to buy it. Yesterday we talked about National Storage and Max Linear, which seem to be setting up trend line buys at this level. I want to talk about Smith & Wesson today, which is setting up a second stage base. Smith & Wesson manufactures firearms, including revolvers, pistols, rifles, and firearm-related products and accessories. The stock right now is working on this second stage base with a pivot point up here in the 2654 area. This is a cup-shaped base and gets a 72% checklist rating. For aggressive traders looking for something to buy, you may want to keep an eye on Smith & Wesson as it breaks through its pivot point up here in the 2654 area. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.